ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, say that. Raise your hands up, raise them up.
All right. Hi, everyone, and happy new trading day. It is Wednesday here, GMT plus 8, just past 11 a.m. And welcome as well. We've got a few in again as well. Thanks for joining us as well. And I hope everyone had a good trading session last night. The Forex Briefcase investors, make sure you check the MAM accounts. There was a trade closed out earlier today as well. So really moving along quite strongly, 4.5% made this trading month so far with a few days left. So definitely make sure you hit up the Forex Briefcase section in the LCMS Traders Club as well. And anyone watching on YouTube, which is the delay telecast, make sure you hop onto the LCMS Traders Club as well. But just to get into it, guys, it is episode 421 of the Currency Call presented by Forex Trading Asia. And a quick introduction as well. So if you're brand new here, we do this currency call every Monday to Friday at 11 a.m. GMT plus 8. And we analyze the currencies as follows. Mondays, we do the Aussie and Kiwi. Tuesdays, we do Euro. Wednesday, Pound. Thursday, we do Yen and Gold. And then Fridays, we do CAD and Crypto. And in the currency call, you'll get the market economic updates, the key support and resistance levels, and of course, much more, including trade ideas. And this currency call is going to be very beneficial to both the long-term investors and the short-term traders. And here we will go through what could move prices, the possible trade ideas, and we'll also go into highlighting the targets and risks as well. What are, of course, as well, guys. So enjoy if you are invested with us. And finally, importantly, a disclaimer, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to taking any trades that are discussed here and also in the LCMS Traders Club as well. Always feel free to ask questions too. We are here to help. But just to get things going, it is a busy session later in today, but I will go through the US index as well. That did have another move higher as well. So just to share this now with Sam Trade. So as you can see, we really have made quite the breakout. This is the 4-hour time frame. We pretty much did test 96. Very small pullback took place, and I'll just zoom in on that. Really an insignificant pullback, and we have seen currently on the 1-hour time frame, just to give some intraday perspective, we are pushing up again. So really what is leading this is there are key factors that are driving inflation, and there is definitely seen to be an increased risk of an interest rate increase coming up higher. And it really is causing this US dollar to extend. I just want to go into the news as well that we saw last night as well. There are a lot of trading opportunities too that we had with the US dollar moving like it did. So hopefully in the Traders Club, it looked like people were capturing those opportunities as well, which is great to see. And there was quite a lot of activity. So for Tuesday, and this is GMT plus 8 time, just to highlight what did happen. So we had now we discussed this Monday and Tuesday in the currency call of what to pay attention to. And we saw that it was green across the board for the retail sales. We saw core retail sales come in, quite higher than expected, and then even higher than the previous month as well. Industrial production was up as well. And then we even had the industrial production year on year was up again. So pretty significant things here to take into consideration, and that was enough to send the US dollar high. So, where it goes from here, if we just have a look at the news. So there is a lot of CPI data which will be discussed by Gimme and Jin later in the call, but I'll just go down for tonight. So this is GMT plus 8 time zone. So we're talking 9:30 tonight. We do have a bit of a cooling off now in highly price sensitive news. But again, we do want to see this building permit number. It's expected at 1.638 million. It's going to be interesting to see if the building data can come out high enough just to keep this dollar extended. But a pullback, frankly, would be okay to see as well. And I'll be watching to see what happens in this Asian and then in the afternoon session for London and the Europe trading session, just to see if we can get a pullback. I was expecting something on the pullback side, but it didn't really happen yesterday. And then we just sort of trailed sideways. So we could see that today and then a break over 96. But without much significant news, we'll have to wait and see. But again, it's very hard to say that there's going to be a strong reversal. So any pullbacks will likely be bought into still with what's going on and the amount of inflation that's present as well. It's something in the back of the mind that you've got to consider though. But as you can see, just with the calendar, there is a lot of inflation information coming out for the pound especially, and how it's behaved is something to pay attention to. But for the US dollar, guys, like I said, it's really hard to say that a significant reversal is going to take place. It really does look like if you are looking to trade reversals on the majors, bargaining on that US weakness, I'd say really strongly say, short scalps, but not anything of significant conviction, just given how it's moved already early in the week too. So those are my thoughts on the US dollar. Now, just to take off from me now, we've got Gimme, a little bit to go into with the CPI data for the pound. There is a few more countries to talk about, but I think the pound is probably key, and in the lead up, then we've got Gin after Gimme. So over to you now, Gimme.
All right, thank you, Scott. Hello, everyone. Okay, right now it's all about inflation. Okay, so yes, the UK CPI data, okay, will be released later at 1500 hours. All right. Normally, doesn't really have too big of an impact. Okay, but this time round, personally, I feel that it's very crucial. Okay, as to what type of data we'll be seeing later. Okay, when it's being released. Okay, now let's just take a look at what's being expected of the data. Okay, so the main focus here, okay, would be the CPI YOY, which is year on year. Okay, so we actually want to focus on the annual inflation data, okay, because the central bank is Bank of England, okay, is actually targeting inflation to be, well, they're actually trying to target inflation to be at the range of 2 to 3%, all right? So annually, all right? So which is why we want to pay more attention to the annual data in this case, okay? So previously, back in October, okay, the annual data was released to be 3.1%. This time around, they're actually forecasting 3.9%, okay, a strong jump from the previous data, okay? So one thing, why is it that inflation data is very, very important right now? It's because, okay, if you guys remember, during the most recent Bank of England monetary policy meeting, okay, well, actually, they have actually been highlighting the point that inflation has been rising so high up, okay, for the past couple of meetings, okay, even back in September, all right, and they actually hinted that the fact that they may actually be increasing interest rates to tone down this rising inflation, okay, even if quantitative easing, okay, even if the Bank of England's QE program is still ongoing, okay, that means. Now, well, you guys remember, previously during the previous meeting, okay, I was actually saying that I'm expecting the Bank of England, okay, to actually hike interest rates, okay. In the end, they actually disappointed us, in November, during November's meeting, okay. Hence, the unreliable boyfriend number 2 tagline, nickname to Governor Bailey, okay. So, yes, the motivation behind this whole wanting to increase interest rate is basically to tame the rising inflation, okay? During the most recent quarterly economic projections, okay, released by the central bank, they are actually expecting inflation to hit a 5% level mark by the end of this year, okay, which is very, 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 very high. all right? And right now we can see, okay, from the graph, okay, I think it's two data releases ago. I think it's back in September. Yes, for September's inflation, okay, let me just try to get this cursor out of the way. Okay, as you guys can see over here, September's inflation actually hit a 3.2%, okay, annual inflation of 3.2%. And it's, I think it's some 9.5 year high level, okay. And for the data that will be released later on, they are actually expecting 3.9%. Okay, if it actually comes out to be 3.9%, yeah, then we'll be close to like a 10-year high inflation. Okay, and with inflation rising so strongly, I mean, I've been covering this whole inflation issues for several countries already, right? For the past few currency calls, and we know that oil prices is one of the main energy prices, okay, in general, is one of the main pushing factor of prices, okay, and of course there's like base effects and things like that that pushes inflation even higher than what they have been expecting, okay. So with this expectation of that inflation may be rising high, okay, how will this actually impact trading? All right, personally, I feel that there's going to be quite a bit of movement this time around later on at 1500 GMT plus 8. Okay, now suppose the actual figure were to release to be 3.9 or maybe anything above 3.9. Okay, then we can actually expect a strengthening in the British pound. Okay, now if the figure actually falls short of 3.9% and drop within like 3.1 to 3.9, maybe there may still be some strengthening, brief strengthening, but it's not likely going to be like a strong move, okay? And of course, anything below 3.1%, we are likely going to see a weakening in the British pound, okay? Because I personally, I don't think it's going to drop below 3.1, all right? It's going to be a very, very big surprise, okay, if the data releases, like 2.8, 2 point something percent, okay? Because, the ongoing energy prices, rising in energy prices is just too strong, okay? Too strong for inflation to drop at this moment, okay? Now, remember, okay, the reason why I say that this is going to be impactful to pound prices later on, okay, when the data is released, is because during the most recent meeting, okay, the central Bank of England, I quote, okay, they actually mentioned this in the statement, I quote, the committee judges that provided the incoming data, particularly on the labor market, are broadly in line with the central projection in November monetary policy report, it will be necessary over coming months to increase bank rate in order to return CPI inflation sustainably to the 2% target. Now, right now, annual inflation is way above 2%, their 2% target, all right? So what they want to do is tone down inflation, correct? So, if inflation data later on were to be released to be strong, okay, plus, remember, yesterday there was this UK employment figure, which turns out to be very good, okay? Let me just show you the data, all right? Look, employment change, quarterly employment change, 3 months on 3 months. There's actually a 247,000 jobs being added, okay, during this period of time for the month of, for the quarter ending September, all right, as opposed to the decline of 185. Now, just a quick note, all right, the previous data was 235,000, and they actually forecast it to decline, to slow down, the increase to slow down to 185,000 jobs. Okay, why is that the case? Okay, because, in general, the market is actually expecting a decline due to the ending of the UK furlough program. Okay, the UK furlough program is basically just some government job subsidy program. So upon ending of the government subsidy, it's expected that some people may actually lose their jobs. Okay, because company may still be struggling to to make ends meet and things like that. Hence, if it's unnecessary for some of the employees to be around, they may just get fired, okay? So with that, the general consensus is that with the ending of the UK furlough program, the increase in jobs may slow down. Okay, there may actually even be a decline in the number of jobs. Okay, a decrease, a loss in number of jobs in the jobs market. Okay, however, we are getting an increase of 247,000 jobs. Okay, this is actually quite a surprising figure. Okay, so if you guys were actually looking at the pound chart yesterday, I was actually talking to a colleague yesterday, like we were wondering why, pound just strengthened, and we were actually saying like, normally there's not much impact on pound, okay, when it comes to the UK employment data being released, okay, based on our previous years of trading, okay. So why is it that yesterday's jobs report actually caused such a strong strengthening in the British pound? It's because of this, okay. It happens that the furlough program ended, and the market expectation is for the job market to perform slightly poorer than the previous time round, okay, previous month, okay. But as opposed to our expectation, to the market's expectation, we are seeing a strong increase in the number of jobs being added for the quarter ending September. Okay, so because of that, now the UK Bank of England, okay, they're actually paying attention to employment and inflation as well, right? Like the quote that I just gave you coming from the Bank of England, they will be looking very, very closely at these two economic indicators. Okay, employment has already proven that the Bank of England, okay, is one of the factors looking from the Bank of England's point of view has already been met. Okay, the criteria has already been met. All right. Now the second criteria would be the inflation. Obviously, it has already been met. All right. It's just that if they were to let this inflation run super high, all right, then they're gonna be in deep trouble. Okay, which is why they are actually looking at a hike in interest rate to tame inflation down. So if inflation this time round, okay, were to go way higher than expected or even as expected, okay, that's actually a signal to the Bank of England to act during the next monetary policy meeting. Okay, to act meaning to consider seriously a hike in interest rate. Okay, even before the whole QE quantitative easing program has ended. Okay, so yeah, with that we can actually expect movements in pound, okay, later on at 1500 hours when it moves. Okay, as to the technical levels and things like that, I believe June will be filling in you guys with the details. Okay, so with that, I'll hand it back to Scott.
So I'll just jump in there, Kim Hong. So if you think that the CPI number is going to be, what do you think it's going to be? First off, what do you think it's going to be?
I think it's unlikely going to climb above 4. Okay, it may actually fall. It may actually release to be around like 3.8 or 3.9, more towards the high side of the expectation. But yeah, anything above a 4, I don't expect to see it. Yeah, but if it's going to be released as anything above a 4, then yeah, we're just probably going to be seeing some flying off the British pound.
And traditionally, when we see a strong CPI number, despite it being above the central banker's targets, despite it being a bit of a concern right now, usually when we see a strong CPI number, and we've seen it recently for all the other pairs, is that we've seen the currency pair strengthen as a result of that release. Yeah.
Exactly. The most recent one being the US CPI data that was released last Wednesday. We actually see like a very, very strong, strengthening of the US dollar across the board.
That's actually in relation to one of the questions we had, I think yesterday or the day before, where the question was asked being that, it's over the targets. Should CPI increase at a moderate rate? At this point, central bankers have somewhat acknowledged that inflation is running hot, but they have their tools ready. They're not going to take any action right now, or not a lot of them are taking action right now. They have the tools ready to take action if required. So it's not catching them by surprise at this point. So with that said about the analysis on the CPI numbers, the possible movements here, looking at the pound dollar on the H4 time frame, pound dollar right now sitting at the 1.3420 level. What I anticipate, and Gimon, you can jump in and correct me if you think otherwise, is what I anticipate at this point is that we'll probably see it sit right across for the next couple of hours. And then if the news does release at that 3.9, I think it might actually hit 4 because the month-on-month number looking like it's jumping from a 0.3 to a 0.8. I believe that might go up a little bit higher than 0.8, which could push year-on-year number to about 4%. So with that, I think we're going to see that push upwards towards that 135.84 resistance level for the pound dollar. But with that said, that's a 150 pip move upwards. I don't think it will go all the way towards that resistance. I think we might see maybe even 100 pips. Stop loss might be about 20 pips. So you could be looking for, just to give you a bit of a trade idea, what we could be looking for is for it to break above the recent consolidation, looking for a buying opportunity above 1.3443, above 1.3443, look for it to close there. You could have a 30-40 pip stop loss for a good 120 pip take profit level towards that 135.84 resistance. If that does happen, you can also take advantage of that move to close anywhere in between that point. So you're still looking for a 30 to 120 pip, about a 1:4 risk reward ratio towards the upside. But I actually think that what's really interesting with the pound CPI number to be released and the possible moves that could happen there is actually what could happen to euro pound. With the pound dollar possibly shooting upwards, with the euro dollar tracking lower, possibly as we analyzed yesterday towards the 1.1254 level. This could mean the euro pound, which I spoke about yesterday, is coming towards that 84.19 level. I would be looking for it to break this support. So an update of yesterday's analysis is if it were to break this support, you could even be looking for it to go towards 83.16. I would be looking to sell below 84, look to sell below 84, 20-30 pip stop loss for a good 80 pip take profit level, or 1:4 risk reward ratio towards that downside. So you don't have to just look at the pound dollar in terms of the CPI number to be released. I think that you have one very good trading opportunity here towards that resistance level. And then also with the euro pound, if it does break below 8419, we could see it track down towards 8316. A very good trading opportunity there. With that, I also want to quickly do a quick recap. Aussie dollar moving as we had expected, climbing up to test close to that 7395, breaking below 7322, now tracking towards our target of 7233. Same with New Zealand dollar, tested and rejected that 7073 and now tracking towards that 6967 support level. So analysis so far has been moving along on track. The euro dollar is halfway towards our target. Now the focus is towards the pound dollar for this afternoon. Look for that consolidation, look for that break upwards. At this point, I wouldn't even suggest to consider this as a straddle. I don't think it'd be worth trying to sell it down with that support level of 133.65 quite close. I think look for that upside potential, and then a lot more trade ideas on the euro pound if it does break below that support. And also tonight we do have the CAD CPI numbers to be released as well. Anticipate some good volatility there, aligned with how we've been seeing CPI numbers being released and that volatility that accompanies. I'll just show you, just do a quick share again. That's the US CAD we spoke about on Friday, where I said it would come up, test. It did come up, test a little bit. I said it would drop. It did drop. Now it's bouncing back up. The key feature tonight is whether it's going to track above 1.2618 and whether we can trade it up towards that 1.2747 resistance. So it's moving in that zigzag fashion as anticipated. What you want to do tonight is, for club members, make sure you join the live trading session tonight, where we will be trading or we'll be setting up to trade that news together. We might actually enter some trades before the news. So live trading session tonight, remember to sign up, remember to join up. With that said, I'll pass it back to you, Scott.
All right, thanks for that, Jin, and also Gimme too. And again, guys, if you can't make the call, make sure you do check out the replay as well. The timestamps are included too, and in the Euro and Pound discussions section in the LCMS Traders Club, we've got the trade ideas. But again, it's very important to watch the video just to get a little bit more context as to the timing and to make sure that you are aware of the news too and what we're really looking to wait on for the catalyst as well. Make sure you do get on the live trading call tonight as well. That's going to be, I think, quite active too. So this week's been active everywhere with the Forex Briefcase account and also for the activity in the Traders Club. So make sure you get signed up for both. Ask questions as well if you're in the club too, and we're all happy to help. But thanks again for watching, and I think it's going to be a good night, Letty. That's right, 8 p.m. Singapore time. That's correct, Imran. Thanks for watching, everyone. Have a great day.